And welcome to episode 54 of the GrowCast show. And today with me, I have Cindy Loh, and she is a financial services consultant with Legacy FA with 8 years of experience. And I'm so excited to be talking to her today. And my first question, Cindy, which I have for you, which I have for everybody all the time, is what does being better than normal mean to you?
It means that I am in my comfort zone. To be a better than normal, I will strive to improve myself on a daily basis so that I am a much better person than the previous day. To be better than normal, I will need to accept the daily challenges and unforeseen circumstances, consciously adopt a growth mindset where I know the power to improve myself starts from me.
And for yourself, Cindy, what makes you better than normal?
Adding value not only to myself but also to others. In doing so, I create a purposeful life for myself and others. I strive to be in sync with the principles and value that I have set for myself. Integrity and honesty are my core value in both professional and personal life.
Cindy, why did you decide to join the financial services industry?
After my husband had a stroke, I need a more flexible time to take care of him. We were financially impacted, and I wanted to share my predicament with others who may also be unprepared to address such unforeseen life circumstances.
Very nice. And how is your financial advisory practice different from other advisors? Like, how are you different?
I have been in this industry for 8 years, and it testament of my service to my client. My purpose is to help them see financial pitfall before they actually happen, such as income protection, retirement sufficiency, taking on mortgage loan, etc. I speak with conviction because at a young age, my husband, who was the main breadwinner of the family, had a stroke. It just happened suddenly. Hence, I can highlight to people the trauma one can go through from a first-hand experience without good financial planning.
Very nice. And it's a very interesting that you have got first-hand experience as well. And for yourself, what are the challenges you faced when you were first starting out as a financial services consultant?
I started my journey with no sales experience, no idea how the industry is, no stable income, no stable money income as I was fully commission-based. Further, I need to make ends meet and also take care of my husband escalating medical bills.
And for yourself, how would you define your ideal type of clients?
I love working with clients who have a keen sense of responsibility towards their family. Such clients prefer holistic financial planning so they and their family are financially secure.
Sounds great. And for yourself, what is holistic planning versus buying another policy?
Holistic financial planning involves 3 things. First, protecting wealth. Despite the resilience and determination of the individuals, these hardworking individuals are acutely aware of the limitations imposed by their own mortality. They are facing the harsh reality that the time is finite and their ability to meet and protect the one day come to an end. This awareness fuels their urgency and dedication, knowing that they must have the most of every moment they have. Protecting the wealth involves many people to prepare for their unforeseen circumstances such as death, total permanent disability, critical illness, which can impact one person's ability to earn. Second, accumulating wealth. Amidst of the daily challenges, each individual exhibit remarkable resilience and hope. They celebrate small victories and remain committed to their long-term goals, understanding that building wealth is often a marathon, not a sprint. They draw strength from their dreams of financial security and opportunity it will afford their loved one. While the accumulation of wealth may be slower than desired, they make incremental progress. Each saved dollar, paid off debt, and well-invested investment brings them a step closer to their financial aspirations. They recognize the importance of perseverance and the compound effect of their effort over time. It involves helping people understanding what is needed to be fund their goals such as education, retirement funding, and legacy planning. Further, accumulating wealth also involves helping people to save in areas such as loan, like enhancing the efficiency of their mortgage loan. Number 3, distributing wealth. An individual may work hard for their family upon passing. Dispute may arise on the distribution of their wealth. on their wishes remain unfulfilled, simple things such as doing a will or CPF nomination may go a long way in effective wealth distribution. I get my client to get such thing done.
So Cindy, I love the 3 steps that you just mentioned. What can someone expect when meeting you for the first time?
Holistic financial planning done with integrity and client needs and wants in mind. I am an experienced financial advisor representative who knows that what I am doing. In the course of my work over 8 years, I have made multiple claims that given client assurance and peace of mind. I have structured process in helping clients or prospect identifying their concern and fear. As a representative from the FA platform, I have suitable and affordable solutions from multiple partners to address their concern and fear. Lastly, I feel that agents push hard for sales when they don't understand client actual concern and situation. I present solutions that fits them like glove.
Makes perfect sense. And for yourself, what if someone had a bad experience in the past facing insurance agents? What do you tell them?
It is unfortunate that they had encountered a bad experience. Firstly, I would like to assure them that I have been helping clients for the last 8 years, and hence my experience and dedication could be source of credibility and trust for them. Secondly, my own experience of a financial crisis may help them to understand that my work is based on my conviction of the need of good financial planning. Thirdly, I want them to buy something only when they need it and afford it. Feel no obligation to buy any policy from our financial planning session.
That's perfect. That's very nice. And do we really need life insurance, Cindy?
Life insurance can be a crucial component of financial planning for many individuals, especially those with independence or significant financial obligations such as property loan. Evaluating a person's personal circumstances, financial goals, and the need of their independence can help one understand the needs for life insurance. It is prepared for unforeseen circumstances, example, death, disability, and critical illness. My own personal and life experience is perfect example of why life insurance is important. Without life insurance planning, any unforeseen circumstances could wipe out all savings on hand.
And should we plan for both insurance and investment at the same time or separately?
It could be the same time if affordability is not an issue, and it is important to plan for the following reasons. First, protecting and risk management. Insurance provides protection against financial risks such as death, disability, or illness. It ensures that you and your loved one are financially secure in case of unforeseen events. Investment, on the other hand, offer the potential of growth and wealth accumulation over time. They help you build assets and achieve long-term financial goals such as education funding and retirement planning. 2. Different purposes. Insurance serves the purpose of providing financial security and protect against specified risks. Investment, meanwhile, aim to grow wealth and generate growth over time. Number 3, financial goals and objectives. Evaluate your financial goal, risk tolerance, and time horizon when planning for both insurance and investment. Your plan should be tailored to your specific needs and circumstances. I regularly review and adjust my client plans as per the changing life circumstances, such as getting married, having children, changing job, or approaching retirement. The common encounter when I meet client is that they complain that they are not in touch with their agent after buying their policy. But this will not be the case for me. My commitment that I will review my client goals and circumstances regularly to ensure that they are relevant and attuned to the changing needs and wants.
Makes perfect sense, and I like the fact that you will do a regular review as well. So for yourself, Cindy, do you think that should we only have one savings pot or many?
It is good to have several pots to serve different needs and milestones in life. Looking into your pot of emergency funds, 6 to 12 months, pots of short-term saving, 3 to 5 years, pot of mid-term saving, 5 to 10 years, and pot of wealth of accumulation, 10 to 30 years.
And also, do you feel that what is, if I could ask you a question, everybody has a misconception on this, right? But what exactly is dollar cost averaging or DCA?
DCA is regular regularly investing a fixed amount of money at regular interval over a specified period, regardless of the current price of assets being invested in. It reduces the volatility and impact of risk by spreading out investments over time. This means that you buy more when prices are low and lesser when prices are high. It is a disciplined approach to investing because it removes the need to time the market, which can be challenging and risky. It mitigates emotion decision, which can help the investors avoid emotional decisions driven by market frustration, fear, or greed. While it can potentially lower the average cost per unit over time, dollar cost averaging does not guarantee profits or protect against losses. It's important for investors to consider their investment goals, time horizon, and risk tolerance before implementing dollar cost averaging or any investment strategy.
Very nice. I mean, I personally am a big believer of dollar cost averaging as well over the long run. And for yourself, do you feel, Cindy, maybe if I could ask you, why should we focus on the long-term behavior of the market?
Historically, the stock market has shown an upward trend over the long term, despite short-term frustration and market volatility. Time in the market versus timing the market. Attempting to time the market by predicting short-term movement is challenging and often counterproductive. Instead of trying to time the market, focusing on staying invested the market over the long term, allow investors to capture the full potential of market growth and benefits from compounding returns. Achieving financial goals. Many financial goals such as retirement planning, education funding, or wealth accumulation require a long-term investment approach to achieve. By focusing the long-term behavior of the market, investors can align their investment strategies with financial goals and time horizon. Investing consistently over the long term allows investors to harness the power of compounding returns and accumulate wealth steadily over time and even periods of market volatility.
Cindy, how does being disciplined help when investing?
Being disciplined when investing helps you stay focused on your long-term goals, manage risks, and avoid common investment pitfalls. It ensures that you maintain a consistent approach, market rational decision, and capitalize on the benefits of compounding and market growth over time. Discipline is a key to building and preserving wealth through various market conditions such as consistency in contribution, avoiding emotional decision, patient, and persistent.
Cindy, when is the best time to start investing?
Now is the best time to start investing as the market volatility do not reflect the underlying fundamentals of the assets. These fluctuations are often driven by speculative trading, market sentiment, and other transient factors. Your investments, much like a durian seed, need fertile soil to grow and flourish. In the realm of investing, this fertile soil is represented by your investments.
Very nice. I like the durian seed analogy as well because durian is one of my favorite fruits as well. So for yourself, Cindy, how does someone protect their income?
Emergency fund of 6 months to a year for unforeseen circumstances and a sudden drop of earning income. These emergency funds will allow one to sustain essential daily living during an emergency. To protect one's income and their family livelihood comprehensively, one would need to consider mitigating risks. The most common type of mitigating risks are income protection insurance, critical insurance, and long-term care insurance.
Cindy, what is the rule of 72?
It's an easy way to calculate how long it's going to take for your money to double. Just take the number of 72 divided by the rate of return you hope to earn. That's the number give you the approximate numbers of years it will take for your investment to double.
Okay, and also Cindy, how does the sandwich generation balance children's education versus retirement planning?
Balancing children education funding and retirement savings to be particularly challenging for the sandwich generation in Singapore. Here are some strategies tailored to you. Prioritize retirement savings. Focus on securing your retirement first, as there are fewer options for funding retirement than the education. Your children can take loans for education, but you cannot borrow for retirement. Plan for your retirement with CPF Life, which provide a long-time money payout to ensure you don't outlive your savings. This will form the base for your retirement. Above this, one needs to invest over a period of time to ensure this is accumulated savings to address the balance of retirement shortfalls. Utilize education, saving plans and accounts. Use the post-secondary education account, in short PSEA, to save for your children's educations. Funds in the PSEA can be used for approved courses in an institution in Singapore. CPF education schemes allow you to use CPF savings to pay for your children's tuition fees for local tertiary education, which your children will have to repay to your CPF account. Implement a dual saving strategies. Maintain separate saving and investment accounts for retirement and education. This clarity helps in ensuring that funds for retirement are not inevitably used for education expenses. Encourage financial independence in children. Teach your children the importance of saving, budgeting, financial responsibility. This can help them contribute to their own education costs. Encourage older children to take part-time jobs or internship. This only help with their education costs, but also teaches valuable life skill. Be prepared to adjust your plan as life circumstances change, such as income variations, changes in education costs, or shift in retirement needs.
Cindy, do you think that planning for your retirement is important in Singapore?
Planning for retirement is highly important in Singapore, given its aging population, rising life expectancy, and evolving economic landscape. Longer life expectancy, Singaporeans are living longer due to advancement in healthcare and improvement in living standard. Aging population. Singapore population is aging rapidly, with a decreasing birth rate and growing population of elderly citizens. This demographic shift places pressure on social support system and highlights the needs for individuals to take responsibility for their retirement finances. Healthcare expenses. Healthcare costs tend to increase with age, and retirees might face significant medical expenses in their later years. Planning for healthcare needs and consideration options like MediSave, MediShield Life, and private insurance coverage is essential for protecting retirement savings from unexpected healthcare costs. Economic uncertainties, both global and domestic, can impact retirement saving and investment returns. Building a resilient retirement portfolio that can withstand market volatility and economic downturn is crucial for long-term financial security. Legacy planning. Retirement planning goes beyond personal financial security and may involve considerations for leaving a legacy for future generations or supporting charity causes. Structuring estate plans and succession arrangement can ensure that retirees' wishes are fulfilled and their assets are distributed according to their preferences.
Cindy, what is your definition of success?
Defining success with a focus on my principle of integrity, honesty, emphasize ethical behavior, trustworthiness, and authenticity in all aspects of life. My definition of success is helping my client to achieve their financial goals. To do this, my goal is to uplift the life of 100. My goal is to help the financial planning of 100 new persons every year. Cultivating relationship based on mutual trust, respect, and open communication. Being truthful and transparent in all interactions, fostering a culture of honesty and reliability. Success defined by integrity and honesty is not just about achieving personal and professional milestones, but also doing in a way that ethical, transparent, and consistent with my values. This approach ensures a deep sense of fulfillment and respect from clients and others, fostering a lasting and positive relationship.
Very nice. I love the definition of success. And for yourself, Cindy, what is the best advice you have ever gotten in your life?
My best advice would be focus on what you can control and let go of what you can't. Focus on what you can control will allow you to have a detailed budgeting and spending based on your income and expenses. Prioritize paying off high-interest debt to reduce financial strain and improve your credit score. Be cautious about taking on a new loan unless it is for productive purpose like a mortgage or education. Making consistent contributions to your retirement accounts and investment portfolio. Let go of what you can't control to reduce unnecessary stress, especially when the market volatility, and learning to accept market frustration. Understand the market fluctuations are normal and focus on long-term growth rather than the short-term volatility. Adapt to economic changes where you can't control the economy. You can adapt by adjusting your financial plan in response to changing conditions such as inflation or interest rate. By focusing on what you can control and letting what you can't, you can create a more resilient and adaptable financial plan, reduce stress, and increase your chances of achieving financial stability and success.
And Cindy, what is the difference between tied agency and an FA?
Tied agency typically represent the sole insurer and markets the products and service by that insurer. An FA represent many insurers and partners. As a result, it can market many products and services that deem necessary for holistic financial planning.
And let's talk a bit about that. What is the process of holistic financial planning?
The purpose of holistic financial planning is goal setting, identifying and prioritizing financial goals. This could include short-term goals like budgeting and emergency fund, medium-term goals like buying a home, and a long-term goals like retirement planning, children education, or legacy planning. Conduct a thorough financial assessment of your current financial situation, include income, expenses, assets, liabilities, and existing financial products. Example, insurance policy, investment accounts. This helps in understanding your financial strength and areas for improvement. Evaluate potential risks that could impact your financial well-being, such as disability, illness, premature death, or loss of income. Mitigate these risks by obtaining appropriate insurance coverage, such as life insurance, health insurance, disability insurance, and property insurance. Develop a budget that aligns with your financial goals and help you manage your cash flow effectively. Track your income and expenses. Identify areas for saving and cutting costs, and allocate funds towards your financial priorities. Assess and manage existing debt such as credit card debt, student loans, or mortgages. Develop a strategy for debt repayment. Prioritize high-interest debt first and consider consolidating or refinancing loan to a lower interest rate and monthly payment. Establish an emergency fund to cover unexpected expenses or income disruption. Aim to have 6 months to 1.5 years worth of living expenses in liquid, accessible account. Set up automated transfer to saving accounts to facilitate regular saving habits. Estimate your retirement needs based on your desired lifestyle, expected expenses, and retirement age. Maximizes contributions to retirement accounts such as into CPF, and also invest consistently over time in a well-diversified portfolio that suit your risk appetite to build a sufficient retirement nest egg. Create an estate plan to ensure that your assets are distributed according to your wishes and minimize taxes and probate costs. This may involve drafting a will, establish trusts, designating beneficiaries for retirement accounts and insurance policy, and appointing guardians for minor children. Holistic financial planning is one-time event but an ongoing process. Regularly review and update your financial plan to reflect changes in your life circumstances, financial goals, market conditions, and regulatory environment. Adjust as needed to stay on track towards achieving your financial objective.
Cindy, what are the necessary insurance for every Singaporean?
Singaporean or Singapore PR will have a national insurance scheme such as MediShield Life, CareShield Life, Dependent Protection Scheme, also known as DPS, is also offered when one starts working contribution to CPF from age 21 onwards. In addition, necessary insurance will be integrated shield plan, term protection to address death, total permanent disability, and critical illness. Long-term care insurance to address severe disability. In addition to insurance, one needs to invest for children education and retirement.
Cindy, will you leave the financial advisory industry as the turnover rate is high?
My life experience with my husband's and my dad's illness has shown me the importance of quality and holistic financial advice. And I'm passionate about helping people. I have a vision of assisting 100 individuals and their family annually, which fuel my dedication to this career. Ensuring my clients are financially prepared and unforeseen health circumstances and life milestones, such as retirement, keep me motivated. With 8 years of experience in this industry and as a sole breadwinner of the family, I understand the challenges but find great fulfillment in meeting and helping people in their financial goals for all walks of life and reaching out to help many more.
Very nice. And Cindy, for yourself, what are 3 good reasons to start investing early?
Number 1, take advantage of power compounding returns. Number 2, able to capture longer time horizon. Number 3, smaller regular amount needed to achieve major long-term financial goals such as retirement. One of the most powerful reasons to start investing early is to take advantage of the power of compounding. Compounding occurs when the returns earned on your investment generate additional returns over time. The earlier you start investing, the more your investment must compound and grow exponentially. By starting early, you can harness the full potential of compounding to accumulate wealth over the long term. Even small contributions made regularly can grow into substantial sums over time due to compounding. Investing early gives you the advantage of a longer time horizon, which allow you to weather short-term market frustration and take more risk for potentially high return. With a longer time horizon, you have more flexibility to invest growth-oriented assets such as stocks, which historically offer higher returns than more conservative investment like bonds and cash over the longer period. Starting early allows you to benefit from dollar cost averaging, where you invest a fixed amount regularly regardless of market condition. Over time, this strategy can smooth out the impact of market volatility and potentially enhance returns. The earlier you start investing, the more time you have to build a diversified investment portfolio and accumulate the necessary funds to meet your goal and small regular amount.
What is the average funds each Singaporean needs for retirement?
The CPF schemes provide a benchmark for retirement saving. As of 2024, the basic retirement sum for those turning 55 is set at 102,900, when the full retirement sum is 205,800,000. These amounts are periodically adjusted for inflation and changes in living standard. BRS provide a basic money payout around 840 to 900, while FRS provide approximately 1,560 to 1,670 per month from age 65 onwards, assuming no withdrawal have been made from the CPF account. The basic financial planning guide to provide a guideline that one should invest at least 10% of the money income to meet retirement needs and other financial goals. Life insurance, LIA has indicated a rule of thumb that needs 50 to 70% of last drawn annual income to maintain current standard of living during retirement. However, the amount needed for retirement heavily depends on individual lifestyle choices. One should consider the following for retirement planning: living expenses, travel expenses, housing expenses, insurance expenses, and lastly, medical expenses.
Very nice. I like the 5 different expenses that you just mentioned. And for yourself, Cindy, how does property impact your retirement goals?
The cost of property involves taxes, mortgage interest, CPF accrued interest, if CPF money are used, and any maintenance due to wear and tear. This means if proper financial planning towards purchase a property is not done, both large amount of CPF and cash are drained, leaving one with a physical assets but not much in terms of liquidity during one's retirement. Making a wrong decision will drain one's financial resources that affect one's retirement goals.
And Cindy, I'm going to ask you a bit of a personal question, but I hope you don't mind. How did your husband first discover or suspect that he had a critical illness, and what was your immediate reaction as his spouse?
It was a heart-wrenching experience in March 2012. My husband, aged 42, woke up with a double vision, and it seemed the whole house was spinning, and he mentioned as if he is experiencing an earthquake. Immediately, I took his BP, and it was 200 plus over 90 plus. I called for an ambulance, and he was in the hospital emergency department. The doctor alerted me that my husband had a stroke, and due to severe impact of his cognitive ability, he may not be able to work permanently. The moment I heard this, I worried about how we going to cope with hospital bill, living expenses if my husband would ever be able to recover and work, and our dream of having children. I was extremely stressed on becoming the sole breadwinner and handling the financial responsibility of the family.
I mean, I think it's quite a remarkable thing that you did when you stepped into the industry yourself to help your husband as well. And for yourself, did you have to tap into savings or take on additional debt to cover medical costs? Like, how did this impact your financial stability?
My husband did not have any shield plan. However, his basic life insurance cover of 40K and DPS of 54K helped to defray part of the medical and living expenses. But this was not enough. Hence, to cope with the sudden loss of my husband's income, I had to borrow from my sister. This gave me the added burden, making sure that I repay my sister once I become more financially stable.
And have you managed to pay back your sister already?
Pasha?
Still in the works of it?
Yep.
And that's the impact of not having the right insurance can have, right?
Yes.
And thank you so much, Cindy, for sharing with us in depth about your story, your personal story, and also how you actually help your clients. Is there any last words, Cindy, that maybe any questions I should have asked or anything that you feel that you want the people to know that I haven't asked you yet?
No.
All good and very nice. And that was Cindy Loh. She is a financial services consultant from Legacy FA for the past 8 years. And that was episode 54 of the GrowCast show. And we will see you real soon in episode 55. But that won't be me. I'll be taking my hats off from the hosting. And you will see a new host in episode 55 real soon as well. See you everybody. Cheers. Take care and bye-bye.